Today, crypto markets are in the green as the latest U.S. jobs data soars past expectations. Elon Musk faces accusations of insider trading with Dogecoin. And Bobby Zagotta of Bitstamp USA explains why he thinks Bitcoin is losing its correlation with stocks once again. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are riding high to close out the week just as new economic data showed nearly 340,000 people were hired in May. In the past 24 hours, Bitcoin climbed back above the $27,000 level. Ether jumped to the high end of $1,800, and even Dogecoin got in on today's gains, rising by 0.5%. Today's jobs report showed signs of slowing wage growth, which is good news for both stocks and crypto. Why? Because that means the Fed's fight against inflation could be working. After today's gains, crypto prices are in the green for the week. Bitcoin rose by more than 0.5% in the past 7 days, while Ether got a 2.8% boost in the past week. While on Wall Street, the S&P 500 roared higher following the jobs data. Okay, let's talk about the top stories. First, a group of investors just accused Elon Musk of insider trading with Dogecoin. In a court filing on Wednesday, a proposed class action claimed that Elon Musk's trolling on Twitter, appearances on SNL, and other public comments allowed him to make a profit on Dogecoin investments at the investor's expense. The lawsuit called it, quote, carnival barking, market manipulation, and insider trading. We reached out to an attorney for Elon Musk, but as of noon Eastern, hadn't heard back yet. And speaking of Twitter, a top executive at ChatGPT developer OpenAI had her Twitter account hacked to promote a crypto scam. Mira Murati is the chief technology officer at the company, and her account began promoting a crypto token supposedly driven by AI. The website linked promised an airdrop to people who sent ETH. Those tweets are now gone, but they are a sign that crypto scammers are trying to cash in on the hype around generative AI, especially after artificial intelligence-focused tokens rallied in the wake of huge investments in the technology from Wall Street giants like Nvidia. Finally, Binance has officially paused bank transfers in Australian dollars as it struggles to find a payments processor in the region. The crypto exchange tweeted yesterday that customers can convert their AUD to Tether and that they can still transact using credit and debit cards. It also assured customers their funds are safe. The shakeup in the Australian market means Bitcoin has been trading at a steep discount in the region. CoinDesk reported earlier this week that customers could buy Bitcoin at a 20% discount thanks to the selling pressure on Bitcoin Australian dollar pairs. All right, on to our main story. Bitcoin isn't quite that cheap here in the US, but it did face selling pressure in recent weeks, including its first negative month of 2023 in May. So what's next for Bitcoin and the crypto market broadly as we head into the summer? I asked Bobby Zagotta, the CEO of Bitstamp USA.
Well, Bobby, thanks for joining us today on Crypto World. I want to start with the markets. Bitcoin just posting for May, its first down month of the year. And heading into June, kind of seems like we're already in the lazy days of summer and it's just the beginning of the month. What did you make of the performance in crypto in May?
Yeah, we've made a few observations about the price of Bitcoin in particular and crypto more generally. So the first is about correlation to the equities market, which is something we monitor a lot. And typically in an uncertain environment like we're all operating in today, there's a lot of correlation, and that has been the case. But for a couple of blips coming out of FTX and the banking situation in March. However, this month in May, or this past month in May, the correlation has dropped between Bitcoin specifically and equities, and it's increased, as you might expect, between Bitcoin and gold. So there's a few reasons that this might be happening, but it's something that we're monitoring quite closely.
So you're saying that the correlation between Bitcoin and stocks has dropped this year or in May specifically?
Just in May, and it's too early to call it a trend, but it's something that we've been looking at closely.
So what is driving things right now? Because there were such clear catalysts at the beginning of the year. You know, the regulatory crackdown in the US is still a dark cloud over the industry, but you also had the banking crisis, which really helped, propel Bitcoin to its big year-to-date gains that we're seeing right now. So right now, it seems like there's a shift in investor focus back to some of the macro drivers These debt ceiling negotiations have sort of dominated the narrative for the last 2 weeks. And now we're talking about yet another Fed rate hike increase. Do you see the attention shifting back to the macro in terms of what's driving prices going into June?
In general, yes. So I think when these macro elements become so pronounced that, people take basically a risk-off posture across asset classes, including crypto. However, I'm encouraged by the fact that, as you mentioned, there's been some decoupling and some independent behavior of the crypto marketplace when there's man-made kind of centralized, institutionally driven phenomenon. And to me, I think that triggers a thought process on the part of a lot of people that is, perhaps, a decentralized platform is a viable part of my portfolio, or should be. But I'm curious to see in this next phase, specifically related to the debt ceiling and working that out, hopefully, and the next interest rate hike, if we will continue to see decorrelation and more kind of buoying for crypto.
How big of a catalyst? Because we have really investors have just been on Fed watch for many, many months now, it feels like. And I know that many were looking forward to a reversal from the Fed. Does that seem like as big of a catalyst this year as it was last year? And particularly, I'm thinking, it seems like everybody right now, and it's so far off, but it feels like all of the investors I talk to on a daily basis are just kind of getting themselves revved up for the halving scheduled to take place in the spring of next year. Do you see, aside from the halving, any big catalysts between now and then other than the Fed rate hikes?
I think in general, people have built in rate hikes into their thinking and their psyche and their models. And so, it would be either a crypto-specific change, such as the halving. There could be another crypto-specific change, related to the regulatory environment. For instance, if there's a settlement between Ripple and the SEC, or some other progression regarding what some of those regulatory actions have been, that could also be kind of a confidence builder across the crypto ecosystem. So different from equities, the crypto space and the price of crypto and Bitcoin, is a product not just of macro, but also of technology innovation, the adoption curve of which we're still kind of, developing across, and specifically institutional adoption. One of the things we've seen at Bitstamp this year is, despite all of these headwinds and all of this uncertainty, increased onboarding of corporate clients pretty steadily. And we think that that's a good leading indicator. There's not a whole lot of trading behind it yet, given the market conditions, but I think people are preparing to participate more fully.
That's actually a really great data point, because from where I sit talking to investors every day, it seems like, institutional interest in crypto has not waned, even though we're not really seeing very much activity from the institutions. They're sort of in wait and see mode, and a lot of them are still recovering from what happened with FTX at the end of last year. And as we said earlier in this conversation, there is still sort of the dark cloud of the, let's say, hostile regulatory environment in the US. We've heard from some of your competitors who have been considering moving their businesses offshore. How are you feeling it over at Bitstamp?
Yeah, well, first thing to consider about Bitstamp is we were founded in Europe, and we're headquartered in Europe, and our primary base of business is Europe. It's about 60% of the global business. So the regulatory environment in the U.S. is certainly challenging for our U.S. business, but it's not perhaps as existential for Bitstamp as it might be for some others in the market, where the U.S. marketplace is primary for them. So that's the first thing. The second thing is the U.S. regulatory environment, does seem to be going from uncertainty to more uncertainty instead of less uncertainty, and that does create friction and slowness on the part of all of the players in the ecosystem. However, from a Bitstamp perspective, we have always postured ourselves as pro-regulation for the space. We think it's absolutely necessary for mass adoption. People need to know there are regulators behind what's happening in order to participate with confidence. And the regulators have a tough job, but I'm hoping that we can do better in the U.S. because it is, I fear, pushing some innovation offshore. Now, the bright side of that equation perhaps is what's happening in the EU right now. So with the MiCA framework, which was adopted by the EU just in the last couple of weeks, that really has, or it seems to us, unleashed more corporate involvement and participation. So again, our corporate onboarding, particularly in the EU, and on the part of a more varied set of market participants, continues to increase. And even in the last 2 weeks, it seems like it's gaining pace, which is really great and encouraging. Hopefully, the U.S. and other jurisdictions will take note.
Okay, that's all for Crypto World this week, but we'll be back again on Monday. We'll see you then.